Yeah, good morning from Vienna. Thanks for having me. It's of course a very challenging environment that we are operating in since February, and with the war in Ukraine starting, we have had a lot of volatility on the markets and obviously a challenging geopolitical environment. The results that we are showing today for the first half of year are a kind of look to the past, but in the same moment, I give us a lot of confidence for handling this challenging environment, even though we expect a tougher business coming up through the winter time. The countries that you were mentioning are dealing with the situation in a very solid way, and the economy is holding up better than expected so far. So I would say with regards to Erste Group results, so far so good, but we are aware of all the challenging matters around us.
Can I ask you what the outlook is for NPLs over the second half of the year here, and what, if anything, you're doing re-provisioning for the second quarter and the outlook into the second half?
Yeah, as you have been seeing, we are posting the lowest ever NPL ratio of Erste Group with 2.2% today, but we expect the NPLs to slightly go up. We are guiding for a risk cost of less than 20 basis points still for the year 2022. We have been using the provisioning from the pandemic and kind of, let me call it, switching those to the new crisis situation. Going forward into 2023, it's very hard to predict how the environment will actually look like. It depends on all the matters you're discussing on your channel very often, meaning the energy crisis, how it develops, how the war will go on. Overall, we are very confident entering this challenging crisis phase out of very solid strengths.
You already earlier on in the year got a boost to your net interest income from rate hikes outside of the Eurozone. And looking ahead, as we are expecting potentially further rate hikes from the ECB itself, to what degree might that flow through to your net interest income and margin?
This is exactly how we are reading the net interest income. We have had significant tailwinds from the rate increases in CE, which are now calming down since the rate hike cycle might come to an end. The same moment, the ECB has just been kicking off the cycle. We are definitely very well positioned for this rate increase. We will benefit from it in a very solid manner in the countries which are the Eurozone nowadays, Austria and Slovakia, and Croatia entering the 1st of January 2023. So overall, we are very well positioned for this rate hike cycle, and it certainly will support our operating performance.